Thank you very much for joining us today, taking an hour out of your day to listen to what we have to say, go through the market, look for some trades. Just a bit of quick upkeep on your screen. You should be able to see somewhere like a little chat box. If you've got any questions, please type them in, or comments. We like comments as well. We like to hear people's opinions. If you've got any stocks that you want us to look at, we're going to be looking at things through more of a trading lens today. That's what the focus of today's session is, rather than a longer term outlook. So we'll probably stick to mainly technicals, rather than focusing too much on the fundamentals of the companies you want us to look at. I hope that's okay. But why don't we get stuck into it? I'll kind of cover this a bit further on. If you do have any technical issues as well, just quickly, you can see the number on your screen. Just give us a call. Someone should be able to help you, and hopefully we can help you troubleshoot. Otherwise, let's get stuck into it. So hopefully you attended the last session. This is part 2 of the little short webinar series that we're running. The first session was mainly focused on the basics. And I kind of ran through then who we are and who you're kind of listening to. If you didn't have an opportunity to catch that webcast, you can always listen to the recording after this one. But just to kind of, refresh your memories or fill you in if you didn't attend, you're listening to Traders Circle. Now, Traders Circle's been around since 2005. We're a small business. We are in the heart of Melbourne, in the CBD. So if you're ever in the CBD, you're welcome to come and visit the office, say hello to the trading desk. Myself and Tim and the other presenter here today. We are mainly traders who want to support other traders. And part of the way that we deliver that is through education. So if you're new and you don't have a lot of experience, or, maybe you've been buying and selling some shares, but you want to get into maybe shorter term styles of trading for income generation, then what we can do is we can equip you with the skills, we can fast track your progress. More importantly, provide you with a very large amount of support to help you get to where you want to be with it. Emerald Financial, Emerald Equities, on the other hand, is more focused on longer term styles of trading. Now, keeping that in mind, I am actually in the office today. We haven't been in the office for quite some time, being Victorians. So if there is a lot of ambient noise in the background, forgive me. Sometimes depending on what the market does, the phones can ring. My colleague Sam next to me might be talking. So if that happens during the presentation, then just obviously ignore it. So today we're going to be running through something that's very similar to basically something that we do every day, right? So we're giving you a taste in many ways of what our clients get to experience fully Monday to Friday from 12 to 1 when the market's open. So for example, Sam just finished running his webcast today. So he runs his every Thursday from 12 to 1. I run my webcast from 12 to 1 on a Wednesday. So I ran mine yesterday. Tim, who's the other presenter, and I'll introduce him in a moment, he runs his on a Tuesday. Ben, one of the other advisors, runs his on a Friday. And Jimmy, one of the other advisors, runs his on the Monday. So you get to hear every day from 12 to 1 a different advisor who, we all have our strengths and different areas of expertise, albeit we all kind of are very similar. We certainly, you do get to have that kind of differentiation of opinion. You get to go through the market and look for trades as a group. So that's one of the services that we provide our clients, and that's what we're going to be doing today, essentially. So we'll start off with a bit of a market view. Obviously, it's good to talk about what's going on. It kind of puts everything else into context. We'll look for some new trades. Some people had messaged in some of the stocks they want us to look at. And again, just to clarify, because this is a Traders Circle presentation, and we're more about shorter term styles of trading. We're going to be focusing a lot more on technical analysis as a lens to analyze those stocks. Hopefully you attended the last webcast that I ran just myself last Thursday evening, that was. Again, if you didn't have an opportunity to, of course, there is the recording there, and you should be able to find it you might be able to find it on our YouTube page if it's been uploaded. We don't upload every single webcast, obviously. But if you got to watch that, then what today's session is applying kind of some of the stuff that we taught there in the live market. So it's about taking it from a theoretical thing or a theoretical practice last week and actually applying it and making it practical. That's what today's session's about. We'll run through obviously some trade examples. So we'll look for the trade, we'll apply a strategy, and then cover kind of everything. But I'll touch on that in a moment. And then what I'll do is I'll jump on at the end and I'll talk about some of those core skills that you need in order to be a successful trader. And I'll talk about an education program that you can come and join us for if you're interested in learning how to trade properly. So my name's Caro. That's my picture on the right. I'm yet to update that picture once again. I say this every time if you attend my webcast regularly. My hair's quite longer now due to COVID. I'm actually booked in to get a haircut tonight. The person on my left is Tim, right? Between the two of us, I think we've been here each for about 10 years almost. A very long time at least. And that's actually fairly normal here at Trader Circle. There's only about 12, 13 of us in the office, and we've all been here for a very, very long time. Tim is the head of the trading desk, right? So you're going to be hearing from someone who has a lot of knowledge on the market, who helps clients every day with their trading, prices up trade ideas, has a complete oversight over the entire trading desk. Tim also used to be a trainer, so used to do a lot of the education side of things, which I've taken, I would say, over more of the last few years. So Tim, not only hearing from someone who has a lot of knowledge on the market, but you're also hearing from someone who knows how to deliver that in a way that's easier to understand as well. So it should be a great webcast. We're very interactive with our clients. So if you do have any questions or comments, please type them in. We'll get to them certainly. Before I kind of really get stuck into the guts of it though, just keep in mind that any advice contained in this presentation is general only. So it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. Now, again, I just want to, before I hand the reins over to Tim, who's really going to be doing the bulk of the presentation, I do want to kind of touch on something that I talked about last Thursday, right? So just to kind of bring it back to really what the goal of today is. Yes, it's obviously trying to find trades, but what we're going to be doing is we're going to be analyzing it from this kind of perspective. If you do want to be a successful trader, then these are the three things that you want to be good at. And I'm going to cover this again at the end, kind of really drive home the point. But we'll talk about picking direction using technical analysis. We'll talk about the different strategies that we implement in order to take advantage of our view, right? And then we'll talk a bit about risk management as well. Now, what brings all those together is a set of trading rules. And this is how I think everyone should approach their trading, is to basically try and pull together all these three core concepts in a set of trading rules. So I'm not sure we're going to go exactly through each of the trading rules that we run. I mean, some of us have slightly different ones anyway, but we are going to be certainly sticking to a structure. And that was kind of highlighted again in that last webcast. So without further ado, I'll bring on Tim, and I'll just quickly hand it over to him. One moment.
Fantastic. Thanks for that, Caro. Just give me one moment. I will just share my screen. Okay, perfect. So you should be able to see my screen there. Okay, so really the purpose of what I want to do over the next half an hour or so is really just demonstrate a rules-based approach to trading the market. Okay. Now, I can't show you every rule. I can't explain every rule. That's what we do courses for. Our courses are 2-3 month courses, right? Two-day face-to-face, and then you have support for a few months after that to make sure you understand all the concepts. It does take time to understand this properly. So I am just streamlining this today. What I want to do is, like I said, just demonstrate a rules-based approach to show you that there's better ways of trading and investing in the markets than just hearing something on the news or a mate giving you a hot tip, okay? So these are the rules that we use. These are the rules that we teach. Obviously, as our clients get more and more experience, a lot of them make little tweaks to these rules. But the base concept of what I'm showing you today on the chart is the technical element of our rules. And what I want to do is demonstrate those technical rules and then show you a few strategies on the back of that. Okay, I'll be using mini warrants, and I'll also show you a little sort of sneak peek of what options look like as well. Okay, so anytime that I look at the market, guys, the first thing I do before I start looking at stocks, before I start looking at my positions, is I look at the XJO. Now, the XJO is the top 200 stocks of our market. Okay, there's two major indices that we use on our market. One's the All Ords, okay, XAO, and there's the XJO. The reason why we use the XJO, the top 200, is because you actually can trade this index. We can use mini warrants and also options to trade a view on this index. Therefore, that's why we prefer this over the All Ords. You'll find that they move very, very similar anyway, right? There's not much of a difference between the two. Okay, so you got a pretty busy chart in front of you here. Okay, so this is one of our typical charts that we use on the desk. Okay, these are all the indicators that I like to look at, Bollinger Band, stochastics, and there's some moving averages there as well. I'm not going to go into any of that today. All right, it's just too much. So I'm going to just flick over to a blank chart here. Okay, get rid of some of the noise. And let's just focus on the momentum and the share price movement and the trends of the market. Now, Caro would have explained some of this to you last week in the webcast. So if it sounds a bit foreign, you can find the recording of that webcast on our YouTube channel. You would have had it emailed out to you as well. Or if you can't find it, just let us know. Okay. No video is, can everybody see my screen there, guys? Can some people are saying no and some people are saying yes. All right, let me stop sharing and I'll reshare again. Just give me one moment. Okay. How about now, guys? Still no? Okay, so some people are saying yes and some people are saying no. So for the ones that are saying no, maybe try and jump out of the webcast and come back in again, because it looks like it might be more of a problem on your side rather than mine, because I'm getting indications that some people can see it. All right, I'm going to keep going. So the first thing that I do, guys, when I jump onto any chart is I'll come back out around 2 years, okay? What I'm looking for here is what's the current trend? And it's obvious, right? Higher peak, higher trough, higher peak, higher trough. You're going to hear this a lot with technical analysis. Higher peak, higher trough. That's what represents an uptrend, okay? So over the longer term, I know I can start looking at drawing in an uptrend line. Okay, so that's what can I draw in that's going to pick up those troughs the best, right? That's what I'm looking for here. So perhaps maybe something like this, okay? I'm looking for as many touch points as I can. I'm not aiming to touch current day. I just want to touch as many of those troughs as I possibly can, okay? All right, so that represents the longer term trend. All right, now I've got that covered. I'm going to start zooming in and see what's more relevant in the way of support levels, trend lines, that sort of thing. All right, so from a more of a medium point of view, since July, what has our market been doing, right? It's formed one higher peak through here, but all these peaks are below it. It's formed one lower trough through here, but these troughs are higher than it. So what's the current trend, okay? It's not quite clear, is it? So what's our market doing? It's going through a bit of a sideways phase, okay? It's really just sort of hanging sideways, and there's a few key levels of resistance and support that it's obeying. Okay. Furthermore, look, there's a few things that are starting to line up here. If you're an experienced trader, if you know a little bit about technical analysis, we could be seeing the start of a reversal pattern here, which is a head and shoulders, but that will only be fulfilled if 72 breaks, so it's too early to call that. So we're really just in a bit of an uncertainty phase, aren't we? We know the long-term trend's up, that's holding, but we're in that sort of sideways phase where the market's just stuck, okay? And this happens, that's very common for our market to do this type of thing. So what you're seeing me do here now is I'm drawing in the all-time high resistance. I'm drawing in levels that have a lot of touch points, key levels, right? You can see that the market loves this 74.80. It used that as support through here, resistance, resistance, resistance. So that's the key level. So I'm drawing in the key levels and I'm drawing in the most recent levels, okay? There was a bit of a key level here. It's using that today. There's a bit of a key level maybe here because that's most recent. And then we're back down at 72. All right. So as this market's whipping around, I'm monitoring what it's doing at these levels. So intraday today, it's come down. It's tested this uptrend line. It's tested the 73 level almost, and it's already starting to buy up again. Okay. So what's that telling me? At this stage of the day, it's telling me that the 73 is likely to hold for now. And we're probably just going to have much of the same as what we've seen in the last 3 weeks, which has been sideways between 74.80 and 73. Okay. With a bit of volatility on the way down, it's common. Like we saw it last time, it pushed straight back up from that level. It could easily do that again right now. All right. So what caused the sell-off this morning, guys? Well, let's think about that for a second. There's a bit going on out there. So I'm going to talk a little bit fundamentally now. We saw inflation data from the US last night. So that caused a bit of a volatile session over there. If you want to look at the US market, I use the S&P 500, the top 500 stocks over there. Okay, so we saw a bit of a bearish night on the US market last night. And that was mainly triggered by their inflation reading, which was much higher than expected. Now, for quite a bit of this year, guys, okay, they have been reacting heavily to this inflation reading. There's a lot of investors out there at the moment that are worried that the Fed's going to quickly taper and start increasing interest rates. And the more that inflation gets out of control, the more that they're speculating that that could happen. Now, that's causing short-term volatility in the market, guys. And it's always, for all of this year, has been short-term. My view on that, okay, is interest rates going up is usually a positive thing for the market, okay, not a negative thing. If interest rates are going up, it usually means the economy is very strong, okay, and usually markets in the US go up for at least 2 years after they start increasing interest rates, okay. The reason why I think we're pulling back in the US, and that's affected a little bit of the sentiment here as well. Have a look how far off the trend line they are. They have had 4 weeks in a row of rising. You've had a few little down days. They were way overdue for a pullback. Okay, I would not be surprised to see the S&P 500 come back to key levels back at the all-time high here. It's very common for them to run into blue skies, pull back and test previous all-time highs before going again. Very common, guys. Okay, so we could easily see another 100-point fall in their market over the next week or so. All right, and that's roughly 2%. That 2% move more, like even if that from the highs, it'll be 3%. That's the typical trend movement. That's your counter trend, guys. Okay, there's nothing to be scared of here, right? They're in a roaring uptrend. That hasn't changed. Okay, you can see from the trend line they rose 8%. Okay, from back in October they rose 10%. If you're going to rise 10% in a month, well, 3% pullback, it's on the table, guys. It's on the table. All right, so that's one of the reasons why we're down today, right? A bit of negative lead from the US coming back to the XJO. The other reason why we're down today, guys, right, because we fell a little bit in the morning and then we accelerated that run further, is because we had weaker than expected job numbers here in Australia today, okay? Which is a bit of a shock to the market because we're all expecting stronger numbers, right? With the reopening in Vic in New South Wales, we're expecting sort of, unemployment to be going down, not up. Our unemployment went from 4.6 to 5.2 for October, right? So it went the other way, okay? It went the wrong way. The employment change was down. It was meant to be up, meant to be positive, okay? And full employment change was down, not what they were expecting. Okay, so 5.2%, right? Now, look, there could be all sorts of things going on there. But it's a negative thing, guys. What the market's been wanting to see is that the reopening effort is going to see unemployment go down. It's going to see people working more. And it means our economy is going to get back on track, even though that the government's no longer supporting us, right? Now, the government stepped in and did a lot of COVID support, didn't they, right? There's a lot of payments that went to people that were locked down. That's all gone now, right? So this is what the market's going to be weighing up today. Now, what that's caused today, guys, if you have a quick look, if you go look at the XFJ, right, the banks are down heavily. If you go look at the XMJ today, the miners, they're up a little bit. So what are we potentially seeing here? We're seeing a little bit of a rotation out of the banks towards the miners, okay? And that's because of this unemployment. It's because of the inflation worries. The inflation worries are also seeing things happen behind the scenes in the credit markets, which are negative for the banks. I'm not going to go too much into that. I'll blow your minds. It'd be too heavy for this webcast. So, but what I'm seeing today, guys, is a rotation from the banks into the miners, and we'll be monitoring whether we think that's going to continue in the short term or not, because we can trade that, right? We can definitely trade that. All right, so what's my market view today, guys? Okay, let's get back to that. I'll be watching this closely throughout the day. I want to see that this market holds 73. Okay, this is the level through here around 73.13, 73.11. Okay, it's thereabouts. That's the level that needs to hold. If this breaks, I start becoming a bit worried. If it holds, then I'm thinking, okay, we're just going to hang sideways here like we have been over the last few weeks. If that level breaks also, there's a little double top pattern that could be playing out here. So if that breaks, technically the market's going back to at least 72, okay? So today's one of those days, right? Is it going to break? Is it not going to break? Okay, that's sort of where we're at right now. Okay, so let's flick through some stocks. If you have any stocks you'd like me to have a look at, please put it in the chat box now. I've got a few from the registration page, so I'll start going through some of the ones that you guys wanted me to cover. One was BHP. Okay, we actually have a trade on BHP at the moment. It's an option strategy called a bull put. Okay, I won't go too much into that right now. All right, so let's go out in time. The first thing we want to look at is what is the trend, okay, in the long term. And you can see there was a roaring uptrend through here, okay, that broke through COVID, okay, that was the COVID pullback. We had another big roaring uptrend through here, okay, and it doesn't matter how you draw that now, that's broken, okay, so it has been downtrending. Okay, and downtrending very quickly. All right, what's the most recent troughs been doing? 1, 2, 3, maybe 3 troughs here. Okay, well, all those troughs are going sideways, aren't they? Okay, so that's starting to show signs of it bottoming out. Okay, perhaps this downtrend through here is now starting to find a bit of support. People are happy to buy at that 35.60. They're seeing value at that 35.60, aren't they? Okay, so it keeps holding that level. Resistance through here. Okay, it hasn't been able to get above 39. Every time it tries to, it gets hammered back down again. Another resistance level around here as well. Okay, most recently couldn't get through, got hammered down, and there was a bit of support through there in the past. Can you see how the market draws itself to certain levels? When you really stare at these charts, you see these stocks get drawn to these levels, and there's many reasons of this. Okay, one reason is there's many of us traders out there, plenty of us out there trading these levels. Okay, so day by day, there's people like us here, going long or short the stock, trading the upward or downward movement based on these levels. So if everyone's looking at those levels, then it's going to be a self-fulfilling prophecy. The other thing is there's a lot of algorithm traders out there that also identify these levels and use these levels in their algorithms. Okay. All right. So basically, if you want my view of BHP, I think there's a high likelihood of a bottoming here. Okay. And I think it will stage a pretty big recovery at some point next year. Purely from a fundamental standpoint, that one of the reasons why iron ore is down so much is that China's got caps on their steel output because of the Winter Olympics. Once the Winter Olympics are finished, there's a likelihood that those caps will be removed, and the iron ore industry can get back to, or the steel industry can get back to some form of norm. All right, so I think you'll find maybe March next year that iron ore price could start recovering. But you're going to remember the market is a forward-looking beast. So maybe the rise will start before that. Okay. What we do is we're sitting and waiting, using our technical signals to tell us when the right time is to get in. Now, that's close to a bullish signal today. Okay. But wouldn't fit our rules entirely. So we wouldn't be trading bullish on that as a directional trade today. That's for sure. Okay. Even though there's a bit of buying there today, resistance is too close. We don't have the higher low that we look for. There's quite a few things there that's wrong that would stop us from going long today, okay, from a directional standpoint. You could do a bull put, okay, on a day like today. That does fit for a bull put, but that's a conversation for another webcast. All right, so that's BHP. I think there's a very high likelihood of it bottoming here. Obviously, we'll want to see iron ore stop falling. Iron ore futures are up almost 4% today, guys, okay, which is one of the reasons why miners are running a little bit as well, okay. All right, so that's BHP. The other one on my list that you guys have asked me to look at is Westpac. Now, Westpac was probably one of the worst of the reporters out of this banking reporting season that we saw through late October, and hence the big pullback you've seen here. This stock's now reported, it's gone ex-dividend, that's all happened. So now it's kind of like, what's next? You know what I mean? Like I said before, the first thing I do is go out, look at the longer term. There was a big downtrend through here. The banks, have been hit with a lot, to be honest, over the years. Okay. You had the Royal Commission into the banking, you had COVID. If you go back far enough, you had APRA putting a lot of new restrictions on. So our banking industry has gone through a lot in the last 10 years, guys, right? Hence the share price movements that we've been seeing. Now, that's the bottom of COVID. The trend was up. Okay, we had higher peaks, higher troughs all the way through here. Quite a strong trend. And then it went sideways, and now that trend is starting to break. What's the current trend? Well, we don't know, right? You got a higher peak but a lower trough. So there is no trend here. So what's that telling me? Leave it the hell alone. Okay. I would not be trading Westpac right now. Okay. That chart says go find something that looks better. Go find something that's got a good support or resistance level. Go find something that's got a nice and decent trend. Leave it alone. Okay. This is not a time to be blindlessly trying to pick the bottom. Okay. Yes, it's fallen. Yes, it could recover, but it could also keep falling. Okay. You don't know how bad that news was in the report, and you don't know how the market's going to interpret that news. Okay. So leave it alone, let it settle, and let it find its next trend, whether it's up, down, or sideways, because we can trade up, down, or sideways. We can't trade this. Okay. So we'll leave this one alone. Okay, let's keep going through. So that was Westpac. Someone asked for Bank of Queensland. So let's jump across there. Okay, also disappointed after its reporting and pulled back. What I like about this stock, though, it's established a really good base through here. Okay, have a look at that. Support. That was COVID. Support. Okay, so it's got a really, really good base around this level. The trend is obviously struggling. Okay, so you got a bit of a trend line through here. All right, maybe draw that. Okay, a bit hesitant to really say that's a strong trend line. Technically, you could draw it, but I think the trend really ended through here. Okay, We went from, that was probably the last time you had a really good high peak through here. All right. So for me, I think this uptrend that what we're seeing through here, guys, okay, that's kind of going sideways now, isn't it? We haven't seen a higher trough for a while. Yeah. Remember, an uptrend is higher peaks, higher troughs, higher peaks, higher troughs. This is sideways, right? These peaks are almost the same, and these troughs all the way through here are pretty much the same. All right. So what we can trade here, all right, getting rid of some of the noise, is the boundary of this channel. All right. On the right signal off this support level, we would start considering a trade. In the very short term, you can see there's a downtrend here. Now the pattern, this could either be a descending triangle, being that there's a support level there, or it could be a pennant pattern. There's two different types of patterns that we teach now in our courses. All right. So if I was looking at this today, I'd be going, well, I'm not trading that. I need to wait for a break of this pennant pattern, and I need to wait for the right signal, either bullish or bearish, to do a trade. Okay, so Bank of Queensland, you're kind of just in limbo, waiting for something to line up. It could break and keep falling, or it could break and rise back up towards the top of this channel. I'd also have to mention there's a bit of resistance in the middle of this channel as well. You can see that it might, you'd have to monitor. If you jumped into a bullish trade, you'd have to monitor the action at 923. Okay. So you can see what we're looking for here, yeah? Most technical analysis is done looking, well, the core of your technical analysis is done looking at peaks and troughs, okay? Peak, 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 trough, trough, trough. And it's always a thereabout scenario where you draw your lines, okay? It's a little bit subjective, okay? You might draw your line a little bit higher than I draw mine, or a little bit lower, and that's okay. I like to sort of go where most of the price action is, okay? All right, so that's Bank of Queensland. So what you're starting to see is I'm starting to get through stocks pretty quickly. I can bring a list of 50 stocks in front of me, use our set of rules to draw some of these lines and eyeball them for certain signals to say, yes, that could trade today. Yes, I could trade that today. No, 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 no. And I can quickly run through a lot of stocks looking for something that lines up. And I could bring a list of 50 stocks down to 5, and I can pick the best out of those 5 to go do a trade. All right, so that's what the rules-based system allows you to do. We give you a set of rules, 1 to 10 or 1 to 12, and then if you hit no on one of the rules, you go, all right, to the next stock. So if rule 1 doesn't line up, next stock, next stock, next stock, and you can really quickly run through them. I'm actually going pretty slow here because I'm trying to explain what we're doing as we go along. Okay, REGIS RRL was another one that was requested. So that's up strongly today. Now, it's clear to see the trend here down. Okay, we've had lower peaks and lower troughs for a good period of time through here. Now, I could draw a downtrend like that. I could potentially draw something more like this. None of that's wrong, okay? All right, so let's zoom in. We've got a few downward trend lines there at the moment. It's about working out what's more relevant. You've got support here at 189, okay? You can see here, double bottom, you've got 2 troughs the same, right? So for me to get into this stock now, all right, I want to see a change of trend. That downtrend looks a bit overdone to me. Okay, it's a big fall. Now, I'm just going to get rid of these trend lines because it's just a bit noisy for me. Now, in the very short term here, this could be the start of a double bottom pattern. Okay, now for a double bottom to be confirmed, you need a break of this resistance. If it breaks the resistance, the rule of thumb is that this stock is likely to rise the amount of the difference between the support and resistance there in the medium term, right? Like, don't expect it to happen overnight. If that breaks, then you got to trade up to about 280. All right. So, but you want that change of trend. I don't like trading unless I see a sign of reversal of that downtrend. I don't want to trade against that downward momentum until I know that the investors are willing to drive it past that resistance level. And that says to me that trend is ending, the trend is changing, and that's a great time to be trading this stock. If you can get on a stock early when it starts uptrending, you can make a lot of money out of that trend. And you can set up a strategy where you just keep taking profits along the trend line. Okay. All right. So that's Regis. Okay. I think it could be bottoming here, guys. Right. It could be finding a double bottom. But understand something. If I go in my time machine, it was bottoming out here as well and never broke that resistance level. And what did it do? It followed the downtrend lower again, didn't it? Right? Don't try and pick the bottom. Let that reversal pattern play out. Okay. If you don't know what a reversal pattern is, get educated. It's a very important bit of terminology. Okay. And these patterns, I live by them. Okay, absolutely live by these patterns. And there's continuation patterns and there's reversal patterns. Okay, so I showed you the pennant pattern before. That can also be a continuation pattern. Okay, the double bottom or double top, that's a reversal pattern. That's saying that the current trend is starting to reverse. That's what that terminology means. Reversal means the current trend's changing. Continuation means the current trend's likely to continue. All right, so that's Regis Resources. Let's keep going through. Okay, so CSL. Right. Well, that's getting pretty close to something we might be able to trade today. All right, so what has the trend been? Okay, in the long term, CSL, the trend has been up, okay, through here. You can see that it's quite a distance away from that long-term uptrend line, isn't it? Okay. The accelerated trend through here is now broken. We haven't seen really a good high peak, high scenario, high peak, high trough scenario for a while. You know, maybe something through here, a bit of a higher peak trough scenario. The peaks don't give me a lot of confidence, but the troughs do. Resistance through here. Okay, so it's had a huge run up and now it's showing a sign that the sellers are grabbing control of this. All right, so let's have a closer look. Depending on how you draw this, it might be holding, it's a bit here or there. Okay, let's have a look at where the support levels are. Okay, so support here, or it could be coming all the way back to here. All right, so this could be a trade, guys. Okay, lower high, lower low, bearish opposite thirds. It is a strong move today, so that worries me a little bit. So historically, what does this do after strong move? Well, it can keep going, right? What does history tell us? Okay, strong bearish signal, it could keep going. Strong bearish signal, it can keep going. So I'm not too afraid here. This stock can be quite volatile when it wants to be. All right, so let's just say there's other things to look at. There's indicators and all sorts of other things that I'm not talking about now because it gets too complicated for a 1 hour webcast. What I want to show you here is how we pick a mini warrant. Okay, so we use our warrant calculator. This is something that we offer our members. Just have to refresh this because it's timed itself out. It doesn't like sitting stagnant for too long. All right, so CSL. So these are all the mini warrants that are available on CSL. Okay. And then we want to get something that has a stop below where we're comfortable. All right, so 297, let's check that. Where's 297? It's too close. Oh, hang on, I'm supposed to be going short. Wrong side of the equation. All right, something I'm going to explain to you. I've jumped ahead of myself here. I always think I'm doing my Tuesday webcast where I'm talking to everyone that's experienced. I've got to slow myself down sometimes. All right, so short means we're trading the downward movement. Long means we're trading the upward movement. Okay. Now, when I'm looking at gearing, the higher the gearing, the more leverage. So the more sensitive the trade's going to be. All right. Now, I don't mind if for a short-term trade, I want the higher gearing. For a long-term trade, I'm happy to go to the lower gearing. All right. So if you're an investor and you're trading a 1-year view using mini warrants, you'd probably be looking for the lower gearing, meaning the stop will be further away. Right. But for me, I want to get in and out within a couple of weeks, a couple of days. I'll be using the higher gearing. Now, once again, I want to have a look at the stop because if it hits the stop, then that's it. Trading halts in that mini. I'll get whatever values left back out of that, and then I'll keep trading again on something different, right? I like to be in control of this. I don't like my stops being too close to where the market is, okay? So 321 is the stop for that particular mini, and I want to make sure that's far enough away. Now, where would I want to actually place my stop on this trade? How do I want to manage my risk on this trade? Where am I proven wrong is basically where I'll be setting that level. So where's resistance? Where do I want to say I'm proven wrong on this trade and it's time to manage my risk, mitigate my loss, and get out? All right, about 315 is that level for me. It hasn't been able to trade above that level in recent times. So 315 is my stop. Okay, so the inbuilt stops at 320, which means if it goes through 315, I'm closing it anyway. So I don't care that the mini stops up there. Does that make sense? I don't rely on that stop. That's just a backup. All right, I'll set my own stop. That makes sense. All right, so the next thing, I've chosen my mini warrant that I want. So I need to price that up. The code CSLKOW. Okay, so that particular mini warrant's trading at $73, okay, which is a far less than 305, isn't it? Okay, so what happens with mini warrants is you get one-to-one movement with the stock, but you're buying it at a fraction of the cost. That's the meaning of leverage, guys. Okay, so if you hear someone talking about leverage, that's what that means. Okay, I'm getting one-to-one movement like I own the stock, but I'm paying a fraction of the price. Okay, all right, so 72.50. So let's fill this out. CSL KOW. 72.50 was the price of the mini. All right, so this all updates automatically. I then choose my risk amount here. So this is the quantity of minis. I move that up or down and go, okay, well, how much am I willing to risk, okay, on this trade? This means if all fails, if the share price, if I wake up tomorrow and the share price goes through the stop and hits the strike, okay, the share price goes all the way up to 378 before the stop gets triggered, all right, which is rare, like that never happens, okay? You got 99% chance of that not happening, right? Usually that stop trigger will come in well before, but it can happen, right? For me to lose max on this trade, it'll be $1,000. I can't lose any more than that. It's capped. It's not like the old CFD days, guys, right? Mini warrants, and the reason why we've always taught mini warrants is you can never lose more than this risk amount here. So you know what you have on the table at any one time. You're in full control. Now, the great thing about trading, this is the biggest difference between trading and gambling. Trading, I can close and only lose 20% of that if I choose to do that. With gambling, it's usually red or black. Yeah, you either win or you lose. Okay, with this, every trade I make, I'm in full control. When I get in, I can get out 2 minutes later. I can get out 20 minutes later. I can get out a day later. I'm the one in control, right? Now, what this matrix here does, share price up, share price down, time. Okay, so there's interest that gets charged. Because essentially, the way this is structured, they're lending you the rest of the value of the stock. You're paying $72.50. They're lending you the rest, and that's how you're gaining that leverage. Therefore, there's interest that has to be paid. Okay. So what happens is there's a small cost in carrying this trade over time, and that's what this is demonstrating as well. All right. So if the share price jumps to my stop, okay, which is 315, okay, what's my risk? What am I going to lose on the trade? All right, so 315, I'll adjust this down to 1.5% movements. That's pretty close there, okay? I'll lose about 12%, okay? Now, typically, you know, the minimum I would put on a trade like this, and I'm talking minimum when we're doing recos, it would be maybe about $2,000, okay? It depends on how far away support or resistance is. So let's talk dollar value, okay? Around 315, you're losing, you know, 200 cost to carry for a while. You know, if you close it just before Christmas, you know, you lose $316. You're in control. You get to choose, you know, when to close that. If it falls down to support, is there enough profit in the trade? And that's one of the main things I like to look at here. So the uptrend and support is around 294. Okay. So come back, 294. I'm going to make about $400. Okay. Flick that back to percentage. Okay. I'm looking at about 18%. And this is where you can adjust it to suit your risk tolerance and go, okay, well, that's not enough for me. And that's also a very small loss. I'm happy. And this is the conversation I have with clients every day is how much do you want to risk? What are you comfortable with? Let's bring up the calculator. Let's talk about this. Okay. You can make $800 down here, but you're going to lose 500 if it triggers your stop. Are you comfortable with that? Do you like that? What's your view? You know, how strong a view do you have on it? And this is how we work with clients on a regular basis. Okay. So this is an example of going short CSL. There's no expiry on mini warrants. You can hold them as long as you want. Okay. Only thing that's going to trigger you out is whether you decide to come in and close the trade yourself. Okay. Or that stop gets triggered. So the share price goes above 321. Okay. There's only two ways out of this, which is a good thing, by the way, right? You're in control. That's the main thing here. The reason why I don't like CFDs and high margining strategies like that is you start losing the control. If things start moving against you, okay, one, you can lose more than what you put in with CFDs. Well, back in the day, they've really gotten strict on CFDs over the last few years. But two, with this, you got so much more control, guys. You really do. All right. Okay, so that's CSL. I'll might have time to sort of flick through one or two more of these before I hand over. I'm going to talk about IGO real quickly. Okay. Mainly because we did a trade on this the other day. Right, and I'll show you why. Okay, so first things first, as I always do, as soon as I look at a chart, I scroll out a little bit and then I go, okay, well, what's the current trend? Well, that is clearly up. Okay, so I want to show you a really good signal, guys. Okay, we haven't been able to see this stock get through 100. Okay, oh, sorry, it's $10. Okay, and also hasn't been able to get through the bottom of this range here either. Okay. All right. So you're an uptrending stock, high peaks, high troughs, has topped out up here, but it's also got a really strong level of support. I've seen stocks go sideways like this for years. Okay. Honestly, they seriously can. All right. So 3 days ago, we saw this come up. All right. Whoops. Does that looks a bit familiar, doesn't it? Okay. Quite often, after one of these bullish days, what happens? Yeah. Bit of a bullish day. It went up. Unfortunately, didn't go up far that time. Pulled back. Okay. Bullish day there off trend. What happened? Okay. Bullish day off support. What happened? Okay. So what are we going to do? And when we see this, tested a strong uptrend line, tested a strong support level. You've got your buy signal. Obviously, there's other indicators that we use. Okay. So as soon as we saw that, we sent this out to our clients. Okay. So this is a mini long trade. All right. We put a tech stop at 880. Why did we do that? Okay. Well, that's where support is. That's where the uptrend line is. If that's broken, if that breaks, sorry, we're proven to be wrong and we must get out of the trade. We must, right? All right. So basically, if I come down, we send the matrix, exactly what I just showed you before. All right. So we can see what our risk is on the trade. So on a 3 gram risk is what we've suggested. Basically, if it comes down and tests our level, right, the 880 level over here, okay, this 880 level, if it tests that, if it goes through it, okay, we're going to lose between $400 to $600 on a 3 grand investment. Where's our target? Our target's $10. Okay, that's where the most recent resistance levels were. There's no lower troughs through there, so I'm quite confident on that $10 level eventually to be tested. Oops, wrong tab. All right, if it gets to $10, I'm making 800. So I like those odds, right? If I can pull off 20 of those trades and I lose on 6 of them, okay, which is, good win-loss ratio. I know if I take profits at 800 and cap losses at 500, I'm going to make money, aren't I? Right? And that's how a system works. Okay. Understand something. We have a set of rules, not just for getting in, but for getting out. And that's so important. Okay. So important. The way you make money out of trading, guys, and if number one thing, if you take this from this webcast, okay, I've done my job. This is the number one thing in the background of your mind. If you want to be a successful trader, you must keep your losses under control and make sure your profits are running higher than your losses, because you're not going to get every trade right. Don't aim to get every trade right, because it's unrealistic to try and do that. If you get angry at your losing trades and it affects your psychology, that is going to be worse than anything else for your trading. It's all psychology, guys. If you've got a system that makes sure that you stay within these parameters where you run your profits higher than your losses, you make money even if you get 60% of your trades right. Okay. So it's that balance. Okay. There's a balance between getting enough trades right or wrong, but also how much profit you take versus your losses. Keep your losses small. Do not be afraid to close a losing trade. Okay. It's the cost of doing business, and you move on to the next one. Okay. There's going to be weeks and months where things are going to be fantastic, and there's going to be weeks and months where you're going to be doing it a little bit harder. Okay. And that's sometimes market dependent, right? So you have this nice, roaring, beautiful uptrend and the market behaves. Very easy trading. Market gets a bit whippy, harder trading. Okay. So you can't get down on losing periods, guys. Okay. There's a cost of doing business. And as long as you're keeping those losses within that realm of what I'm talking about here and what we teach in our courses, can't give away all of our herbs and spices, guys, in the webcast. There's things that we teach in the courses to help you keep those losses within that range that you need to keep it in to make money overall, right? Then it comes down to you on whether you can execute it properly, right? So the onus does come back to you to stay disciplined, to follow the rules. Okay, it's so important. Okay, so that's IGO. That's the trade we suggested out 2 days ago. Okay, the clients are up a little bit on that. And yeah, so hopefully that just continues to slowly grind back up to $10 over the next sort of 2 weeks to a month. Typical trades for a mini warrant could be, 2 weeks to a month. Sometimes we're lucky enough to get out for a few days. Options, which is the other tool we use. I've run out of time to really show you that today. But options, the other tool we use, we can do much shorter term stuff. Okay. So, a couple of hours to a couple of days to anything you want, right? We can do a couple of months even. Okay. You can do a couple of years if you really want to with options, but I don't really advise it. But yeah, so they're the main tools we use, guys. And, you'll see plenty of content in our YouTube page around options and mini warrants and things like that. So I hope that sort of demonstrates what we do, right? So we teach you a set of rules where you can go in, look at a list of stocks. So you jump over to your watch list, you flick through the watch list, you apply these rules 1 to 12, okay? And you go, okay, does number 1 fit, yes or no? If it doesn't, next stock. Does number 1 fit? Yes. Does number 2? Yes. Does number 3? Yes. Okay. Well, you keep going through all those rules until you've got a trade. Okay. So you can very quickly, like I said, go through 50 stocks and go and be you could do that in 20 minutes, guys. Honestly, like on your lunch break, you can fly through a bunch of stocks, find a trade, and then have 2 or 3 trades ready for the afternoon. Because typically we like to trade after 2 o'clock. Okay. Just to make sure the signal's right at the end of the day as well. So, this is designed for people that are also time poor. Okay. You don't need to be spending 8 hours a day trading. Okay. All you need, I used to do this while running 2 food businesses. That's how I got into this, right? I had one in Melbourne Central and one in South Melbourne. I was running those businesses, and on my lunch breaks, I'd be trading. In the afternoon, I'd take a 10-minute break, call the advisors. Hey, does this still line up? Okay, does it still fit the rules? Then I explain the strategy I built earlier in the day, get them to price it up and place it in the market for me. All right, I used to spend maybe total half an hour to 40 minutes a day trading, and that was split up through the whole day. 10 minutes in the morning, half an hour at lunch, and 10, 15 minutes in the afternoon. Okay. All right, so I just looked at the time. I'm going to hand you back to Caro. Caro is going to have a quick chat about what it takes to become a trader and how to get involved. So I'll hand you back to Caro now. Thanks for listening in, and happy to answer any questions at the end.
Thanks, Tim. All right, I'm just going to share my screen. All right, as I said, sorry if it's a bit noisy around here. My colleague Sam is on the phone to a client talking about trades and stuff. Tim would have kind of indicated that's, and as I did at the start, it's a lot of what our job is to really give advice on trades and give trade ideas to the people that we speak to fairly regularly. On your screen should be that previous slide that I had up before, which is the kind of those three main things that we think you need to learn in order to be a successful trader. And what brings them together is a set of trading rules. Now, what I want to do is quickly run through an education course that we run called Technical Trading for the Australian Market. It's a course that we've been running since 2005. It's evolved, it's changed over that time, obviously. We don't run them often. We run them maybe once every month and a half, 2 months or something like that. And with COVID, you can come and do it online if you want, or you can come into the office. So this type of course is really good for beginners. So if you don't really have, and when I say a beginner, you might have already traded a little bit, right? You've got some experience with buying and selling shares. You're involved in the market. You actively do research. You might read things and stuff like that. That's totally okay as well. When I say beginner, I mean someone who's not really used to short-term trading, right? So if you're interested in doing that, then this course is suitable for you. Equally, if you're already short-term trading, but you're not getting the results that you're looking for, well, then obviously you need to probably do something a little bit differently. And that's where this kind of course can help you as well. The course is basically a 2-day session, right? And again, you can do it in our boardroom. You can do it face-to-face now that the government's allowed us to kind of open back up. We just do it in our boardroom. We only take in 10 people. But again, if you feel a little bit more comfortable, you can do it at home, right? We will want you to have a camera, a headset, obviously, so that you can hear and so that you can speak and ask your questions. It worked very, very well over the COVID period, and so it's still available to people who are perhaps interstate or who would feel more comfortable doing it from home. The 2 days is run by Carlo Castellano. Now, you might have heard of him before. He's been teaching and trading for over 20 years. He's actually the co-founder of Traders Circle. He's basically semi-retired now. Tim kind of took over the trading desk from him. Carlo kind of handed the reins over to Tim and is basically just does a lot of trading from home. Carlo, he's not only an expert trader, but he's also an expert educator. So you're hearing from someone who, is able, like Tim, able to deliver this kind of information into an easy, digestible way, so that you can go out there and actually apply it practically. Okay. Following that 2-day session, during that two-day session, what we're going to be covering are those main things, right? We're going to be covering the ability to pick direction, so technical analysis. We'll touch a little bit on fundamentals, but we're mainly going to be focusing on those technical analysis principles. We're going to be focusing on mini warranted strategies as well as risk management. What'll bring all that together is a set of trading rules. Okay, now these trading rules are the trading rules Carlo uses himself. So you're learning the trading rules that a professional trader uses and has been using, and it has evolved over the past 20 years. Now, we want you to follow those trading rules, okay? And then as you get a bit more experience, you can tailor them to suit your individual needs over time. But in the beginning, we'll kind of expect you to kind of follow those rules, and we'll help you follow those rules. Again, as I said, the picking direction component is mainly focused on technical analysis. So we're going to cover things like entry and exit signals. We're going to cover trends, counter trends, patterns, and indicators, right? It sounds very simple, but it is fairly intensive. It might be arguably the most important part of the course. So we'll spend a great deal of time getting you good at picking direction. We'll teach you mini warrants, right? So, we will teach you an instrument that is a fantastic tool for trading a whole range of things, really. You can trade about 200 different stocks on them. You can trade some currencies, you can trade some commodities, some overseas futures, all through the ASX, which means they're regulated, they're transparent, they're capped to risk, they have inbuilt stops, there's high liquidity, or there's no liquidity issues. They're a fantastic tool, and you can trade bullish positions as well as bearish positions, and you have a choice of leverage. Okay, so we think they're a fantastic tool to teach beginner traders because of all those reasons, right? Particularly the fact that you get to leverage a little bit, and you get to trade bearish markets as well as bullish markets. So, and they're very easy to understand. They're very easy to understand. Following that, we'll obviously cover the final piece of the puzzle, which is really about risk management. All right. So these three things combined, if we think that if you can be good at those three core pillars, then you will be a successful trader, right? Following the 2-day workshop, what we're going to do is give you access to our members area, right? So basically, there's extended learning, right? It's not like you can't learn how to be a good trader in 2 days. It's not possible. So what we do is we equip you with a whole bunch of resources to help you develop your skills over the coming months, right? So you'll have access to training videos that cover all the core topics that we teach during the 2-day workshop. There's the daily webcast that I mentioned earlier at the beginning of today's webcast. So one of the advisors from 12 to 1 every day, the market's open, I should say, every day the market's open, we'll go through the market and look for trades as a live group in the market, which I think is a fantastic resource for beginners who are learning, but it's also a great resource for when you're trading. If you can't make that session, then you can always watch the recording that night. We'll provide daily market updates, we'll give you earnings data, we'll give you reporting calendars, and we'll give you trade suggestions as well. So part of what we do is we run a couple of different recommendation services, right? One of them uses the exact rules that you've been taught during that 2-day workshop. So if Carlo sees a trade that he likes, that fits the rules that he uses, that you're taught, we'll send you a chart, we'll send you a payoff matrix, we'll send you what we think should be the recommended minimum. We will tell you where we're suggesting to take profit. We'll give you all the reasons why we're entering the trade, and we'll package that all into an email and we'll send it to you. And we'll say, hey, here's a trade. You can paper trade that if you want, or alternatively, you can always, if you felt comfortable, you could trade that with real money if you wanted to, right? So you will have access to those trade recommendations as well. We'll give you access to all the technology, so the trading software, all the calculators, etc. And probably most importantly, you get your own personal trainer. So what your trainer's job is to do is to really kind of hold your hand, answer all your questions, like really run point for you as you're learning this stuff. You're going to have a lot of questions coming out of that 2-day weekend, and you're going to have a lot of questions, in the coming months. And your trainer is there really to answer them all. So you can call as many times as you like. We find that the people who have the most contact with us are the ones who tend to be the ones who are successful. So if you lean on your trainer as much as possible, because at the end of the day, our goal is to help you become a successful trader. Because if we can help you make money in the market, then you're likely to continue to remain a client. During that couple of months, we'll run a paper trading competition, right? It's just to kind of incentivize you a little bit to practice. We're trying to simulate real trading as well, mind you. They can be done after hours, right? So you'll find that you're not as efficient as Tim was mentioning earlier. So he was saying that, you could get this done in 20 minutes to half an hour. That's true. But as a beginner, you might find just coming straight out of that 2-day course, you're not going to be as efficient as that. So you can place those paper trades, those like that demo account type thing. You can do that after hours because we respect the fact that, you're not going to be a superstar coming straight out of it. What that'll allow you to do as well, though, is as you build up practice, you will get more efficient. So by the time the competition ends, and you might be ready to start trading with real money, and by that time, you might be efficient. And so you can start integrating it into your work life, if that makes sense. Yeah, so basically from there, the idea is obviously transition to real trading, right? And this is really the end goal for us as well. Right, so we don't allow everyone to come and do these workshops. We don't have a portal where you can enter the workshop yourself. We want to have a chat to you and make sure your goals are aligned with ours. Education for us is really just a stepping stone, as I said. We want to get you to a point where you're feeling comfortable to start trading with real money because you've proven on paper that you can turn a profit. And we want to basically help you become a successful trader, because then you'll likely continue to use our services and trade through us. Now, the investment of the program is a deposit of $995 with one more payment of $995 a month later. Right, so it's basically a total investment of $1,990, and that includes the 2-day workshop face-to-face in our boardroom if you can make it, otherwise it'll be online, plus 2 months of further training where you have access to trade recommendations, training videos, webcasts, software, and your own personal trainer. Now, if you'd like to come along and do the workshop, the next one that we're going to be running is 27th and 28th of November. So we've still got a few spots left there. We've got some people doing it online, so we have a few places in our boardroom if you'd like to come along. I'd book in sooner rather than later. If you are planning on doing it online, let us know, because we want to send you the manuals and all the hard copy material. But otherwise, I think we'll be running some next year as well, of course. So thanks very much, guys, for joining us today. We really appreciate you taking the hour and a little bit out of your day to kind of go through the market with us, look at some trades, kind of see how we do things. If you feel like you don't really need some education, but you'd like some advisors that you could lean on, get some advice from, give you some trade ideas, you're welcome to open up a trading account with us and kind of start there. We don't, the entry into our business or having a relationship with us doesn't necessarily need to begin with education, though, even if you pick up 1 or 2 things by doing education, I'm sure that makes it worth it in the long run. You might not want that kind of heavy commitment in the beginning, right? So you're welcome to give me a call directly if you want. If you want to talk about anything that we've covered today, you could talk to Tim. We're very approachable. But the person you might want to have a chat to is Jared. If you're not really sure where you kind of fit, you want to get involved in the market, but you're not sure trading's right for you, that type of thing, you can always have a chat to Jared as well, who's our market advocate and heavily involved in the education side of things. Anyway, guys, thanks very much for joining us. I think we've covered everything that we need to. Annie Yip asked, am I ready yet? But could you recommend a laptop to buy, please? I don't know if I could recommend one, but what I will say is you don't, for the trading, with the way that we teach you and the styles of trading that we do, you don't need an expensive laptop. So, you could probably get away with something nice and affordable, whatever that means. You might find a $500 to $1,000 laptop, so perfectly fine. Right, but I couldn't professionally give you advice on what laptop to buy. But you don't certainly need it to be an expensive one. I've used very cheap laptops for trading, but that's all you would use it for. If you don't use it for gaming or anything like that, if you just use it for the software that we use for trading, stuff like that, that should serve you perfectly fine. Perfect. All right, guys, again, thank you very much. If you want to have a watch of any other stuff, jump across to the YouTube page. It's Traders Circle and Emerald Financial, or give us a call at the office. Until then, good luck and happy trading.
Fantastic. Thanks, everyone. Have a great day. Bye for now.